Ideally, you would want a good mix of stocks and bonds when investing to protect your funds for retirement. If you want to know how to invest $100 and own all the stocks in the stock market and all the bonds in the bond market, as well as how you should allocate those funds, hit that subscribe button, like this video, and stay tuned.
It's not a game, it's a rich thing.
With $100, you can own all the stocks and bonds that are publicly traded by just purchasing two index funds. One that gives you access to all the stocks and another that gives you access to all the bonds. If you are intimidated by the stock market, purchasing index funds is one of the easiest ways to save for retirement without having to invest too much time and effort in maintaining your portfolio. An index fund is a portfolio of stocks that are included in the stock market index, like the S&P 500. For a low cost, you are able to own sometimes thousands of companies without the headache of keeping track of their performance. The small fee you pay, as defined by the expense ratio of the index fund, takes care of this for you. This fee covers the cost of having the funds passively managed. I usually opt for ETFs or electronically traded funds instead of index funds. Many index funds have the ETF equivalent, which means you have the exact portfolio composition, but differ in how they trade, the fees associated with them, and sometimes the amount of money you need upfront to get started. In my opinion, ETFs are cheaper to own and offer more flexibility when trading. To purchase the ETFs in question, you need to open a brokerage account that allows you to buy fractional shares. I use Fidelity, but Robinhood is an alternative platform that will allow you to purchase fractions of stocks if you do not have enough money to buy an entire share. Before I go further, please note that I am not your financial advisor. Anything that I discuss here today is for information purposes only. Please do your own research before investing. An ETF that allows you to own all slices of the bonds in the bond market is BND. An ETF that allows you to own all slices of stocks is VTI. You can also invest in Fidelity's Zero Index Fund, FZROX, instead of VTI to take advantage of their 0% fees. This means that it will cost you less money to invest in this ETF. Now to figure out how to split up that $100 between the two funds. For this, we will use the 110% rule. You can use the 110% rule as a rule of thumb for how much money you should be investing in stocks and bonds. By subtracting your age from 110%, you will arrive at what percent you should be allocating to stocks. Then subtract that result from 100% to determine how much you should be allocating to bonds. For someone who is 25 years old, 85% should be allocated towards stocks and 15% allocated to bonds. For a 25-year-old who invests in $100 monthly in the stock market, he can invest $85 in VTI or Fidelity's FZROX and $15 in BND. A 50-year-old, however, should allocate 60% towards stocks and 40% of the investment towards bonds. For the 50-year-old who invests the same $100 monthly using the 110% rule, she can invest $60 in VTI or Fidelity's FZROX and 40% in BND. As they age, they should use the 110% rule to adjust their allocations. Notice the older you get, the percentage of your portfolio that should be invested in bonds increases. This is because as you get closer to traditional retirement age, you want to protect your money as much as possible from unexpected downturns in the stock market. A younger person has more years to recover from those downturns, so they can be more aggressive by investing in riskier stocks. In comparison to stocks, bonds are less risky, but they offer lower returns in general. In this example, we used $100, but know that you can apply that 100% rule for any amount of money that you have, even if it is just $1. As your portfolio grows in size, you have the opportunity to earn more income in the form of dividend payments. This is free money that you earn just for owning the stocks. I created a video about dividends, and if you want to take a look at it, you can click on this video here. I also created a video about the income that I receive from some index funds that I own. If you want to take a look at it, you can click on that video here. I will also leave links to those videos in the description of this video below. Hope you saw how easy it is to purchase stocks and bonds using the 110% rule with very little money and still have a very diversified portfolio. If you enjoyed this video today, please like and subscribe to my channel. Of course, please do your own research as I am not a financial advisor. See you next time. Bye.